Well, I think it's a really dramatic stimulus and probably adds a 0.5% to 1% to U.S. GDP. On a more important level, it shows that perhaps from a governmental point of view, that we can do business together. And I think there's a need to reestablish confidence generally between the business community and the political system. And this is a good start.
How healthy do you think the American economy is going into 2011? And specifically, do you think we need the quantitative easing, the money that is being pumped into the system by the Fed? Or is the economy, to borrow Mr. Bernanke's phrase from a couple of weeks ago on 60 Minutes, self-sustaining at this point?
I think the economy really has pretty decent momentum, whether it's a 2.5% growth. We can see this through most of our portfolio companies. And I think most people in the business community would feel that we have forward momentum.
So you're pretty optimistic heading into 2011. I mean, I don't mean to put words in your mouth, but I kind of do.
Well, I think you're good at putting words into one's mouth. But I think we have forward momentum. I think the quantitative easing is right on the margin as to whether that's really needed. One could make the argument that that was marginally a good thing before you had this almost $1 trillion of stimulus.
Coming from the fiscal side.
From the fiscal side. But now that we've got the fiscal side, it makes the quantitative easing just a little bit more marginal than it was.
Well, let's go to David Faber now for a question. David?
Thanks, Tyler. Steve, a couple of private equity specific questions. First of all, Dynegy, one of the larger deals of the year. You had that deal. That is total enterprise value, not equity. Carl Icahn, somewhat surprisingly, comes in, bids $550. Obviously, your deal got voted down. Does Blackstone have any interest at all, given there's still a go shop here till January 24th, of trying to compete yet again for Dynegy?
I think, David, that I think it's nice that Carl came forward. You know, he's offered $5.50. Evidently, the stock was trading yesterday at above that price.
Right.
I think that's a good opportunity for the shareholders, and it's good that he stepped out and did it. And you know, as to ourselves, we studied this pretty carefully, and I think Carl's at a price level that that doesn't particularly work for us.
David, you have a follow-up?
Yeah, Tyler, actually, private equity overall right now, Steve, you know, firms like yours obviously raised a good deal of money back in the heady days of the mid-2000s. They want to put it to work, but what I hear from both people at your firm and competitors is that multiples are fairly high given where we are in the cycle, and it's not as easy perhaps as some had hoped to find the kinds of deals with the returns you would want. Do you agree with that?
Well, I think that multiples are a little higher really because the Federal Reserve has certain interest rates at close to zero. And that creates higher stock prices and higher asset values generally for almost every asset class. So it's a little more difficult for us to put money out. We have to do it more through direct deals. We have to do it through smaller deals where we combine companies to get synergies. We have to bring you know, more operational expertise to it, but we'll find a way also because we're investing much more internationally now. We're not just tethered to one market, and there are a lot of opportunities around the world for sure.
It's Erin Burnett here. I'm just curious, when you look around the world, I know everyone says opportunities are there, but it also seems that when you're in a local market, you know more than any big investor or private equity investor from the United States ever can. Do you think you're at a competitive disadvantage at this point?
Erin, do you mean are we at a competitive disadvantage investing outside the United States?
Right.
Well, I think, you know, everybody brings something to the party. And one of the things that we bring to markets outside the United States, particularly emerging markets, is management expertise. Those markets have really done amazingly well, in large part because they have very substantial growth. But a lot of those companies aren't at the same level in terms of expertise, and they seek out people like ourselves to invest in them to help them.
Mr. Schwarzman, we watched a bullet point underneath you while you were talking, which said that you believe this tax compromise will boost economic activity by 0.5 to 1%. Is that accurate? And if so, how do you figure that's going to happen?
Well, I think you're going to have more people with more money. You know, without taxes going up, you're going to have a variety of different incentives with cutting payroll taxes. There are other incentives in this package, and I think that the economy will respond positively to that.
Because the Congressional Budget Office estimates it will increase employment by no more than 0.1%. And we are asking Americans to take on $850 billion more in debt so that rich people can continue to pay lower taxes.
Well, you know, this is one of these situations where there is no perfect answer. You have now a very large amount of fiscal stimulus. Ultimately, nobody likes the debt. You can take either side of that argument. I don't really want more debt, but the faster the economy grows, the more taxes people will ultimately be paying because everybody's earnings will be higher.
A year from now.
Over time, they'll be.
I'm sorry,
Yes,
I didn't mean to
what
interrupt.
about a year from now?
I didn't mean to interrupt. I thought you'd finish that sentence. A year from now, if the economy isn't growing, will you admit you were wrong?
If the economy is in trouble,
If it isn't
Will you
growing,
admit you
if it
were
doesn't
wrong?
respond, will you
Oh,
admit you were wrong?
I'm always comfortable admitting I'm wrong. I don't have
So
a
am I,
problem with that.
Out of necessity.
Yes, well, you know, in our world, when we believe something, we actually make investments based on that, and so it's more than just chatter.
Steve, it's David Faber again. On the subject of taxes, obviously a longer discussion, but nonetheless, there seemed to be widespread opposition to the continued treatment of carried interest as a capital gain as opposed to ordinary income, and yet ultimately that continues to be the case. Do you feel that that debate has been dealt with and that you are safe, so to speak, at having that continuing?
David, I've learned that the political system is highly complex and ultimately somewhat of a mystery to people like ourselves. And so I really can't predict exactly what will happen with that.
Let's get into the realm of prediction, if I might, Mr. Schwarzman. You know, Chris Matthews ends his show every Sunday on a feature called Tell Me Something I Don't Know. Tell me something I don't know that you are watching for 2011 that might surprise us. What is something that's out there on the horizon that you're thinking about that I might not know?
Well, it's tough to know exactly what you know, but I think that one of the interesting things is the real estate business. And in the commercial area, we're now seeing signs of pickup, particularly in certain types of cities. There's going to be a lot of maturities coming due, some of which will be restructured and some of which will present real opportunities.
Which cities and which segments of commercial real estate are we talking about here?
Well, I think you're already seeing the mall business pick up at retail. Even the strip shopping centers are picking up. Basically, office buildings do best in locations on water. So if you take the coast, in terms of New York, Washington, even some other areas on the West Coast, you've seen a pretty goodly increase in the value of office. You're going to start seeing an increase in terms of industrial as the economy continues to develop. And so people who have been extremely negative on real estate, if it's repriced, you'll start seeing higher lease rates. You won't be seeing yet construction. So that will keep that sector of employment down. But if you don't have construction and you start having demand, for example, hotels, I think will be a surprise on the upside. We're seeing basically in the United States, South America, and Asia, very strong demand for hotels.
Let me end on a question about the U.S. equity market. Do you think at current levels that it is undervalued heading into 2011?
I'm not an equity analyst. I think there'll be a modest outperformance in the economy, which should lead to a little better equity market than people were thinking.
Mr. Schwarzman, good luck next year.